What is Project Catalyst and how can people get involved for future funds?
Yeah, so we're building a whole stack of voting into Cardano, and we're partnered with a lot of great companies and think tanks. For example, we're partnered with an innovation management company called IdeaScale. They've been around for almost a decade. They work with Pfizer and Boeing. So you ask, how did Pfizer come up with that vaccine so quickly? They use IdeaScale. So we basically brought them in along with some decentralized tooling, and we created a whole new voting system. We spent 4 years researching how to do a private blockchain-based voting system out of Lancaster University that can scale to lots of users. And basically what we've been doing is systematically launching funds. So the treasury of Cardano takes some of the inflation that normally you'd give to stake pool operators or miners, and it gives it to a decentralized account, and then people submit ballots to get funded. And then over time, people can vet those ballots, and it goes through a process like a gauntlet. And if they survive, they can vote. And if enough votes come in, you get funded. So Fund 2 was the first time we did this in an open process for everybody. Anyone who holds data can participate. And we had over 5,000 community members show up, participate, very aggressive dialogue, and it was only $250,000. Despite that, they put in probably collectively 10,000, 100,000 hours of time into debates, discussions, and poor Dor, the product manager for that, he didn't sleep at all for a while. And then what happened was we approved, the community approved collectively 11 projects. So, and we just published all the voting results. And what's going to happen is every 6 to 8 weeks, we're going to launch a fund. Cardano's going to launch a fund, and they're going to grow. So they'll go from $250,000 to $1 million to larger amounts. And what means more and more people will participate, and eventually a majority of ADA holders will be able to participate and vote right in their wallet, right in Daedalus, or right in Yoroi, or through community-built interfaces. And if you're a good trader, you can buy a multi-billion-dollar baseball team. I am not a good trader. I think I've lost more than $3 billion on cryptocurrencies throughout the many years I've been in this space. So there is probably a few people in your life you'll meet who have lost more money than me trading. So never get any financial advice from me. I just build them. I just think about the technology and the science. The prices are crazy, and the problem is these are very thin, irrational markets, and they're manipulated in many cases. So even if you're right in the long term, it's impossible to be right in the short term, and there can be black swan events that occur. Like, for example, you could be very bullish about the fundamentals of XRP, and then the SEC comes out and it says something, and then suddenly it falls 50%. Yeah. Or you could be very pessimistic about Ethereum or something like that, and then suddenly Ethereum can announce that the US government's doing its passport system on Ethereum, and then it would double in price or something like that. So events have an enormous impact over price, and the macro fundamentals are very difficult to divine and discern. So I just have given up on trying to understand. I do employ some people, like we do have a financial mathematician. His name's Colin Edwards. He's a quant. And he just wakes up every day, builds these beautiful models and everything. And he sends me emails, and we talk about the markets in general, because we need to kind of understand, for when we do budgets and financial projections, what do we think is going to happen? Do we think Bitcoin is going to stay at 35,000, or do we think it's going to 100,000, or do we think it's going down to 10,000 in these things? And the guy has damn near a PhD in the topic, and he's been doing it for 20 years in the classical markets. And usually the reports I get are question marks, because it's just so difficult to actually get accurate predictions for these things. Like if you asked me in December what I thought we'd had a bull run that we had recently with ADA, I would have never guessed it. I'd say maybe 10%, who knows? Yeah, but there's other things I thought for sure would create great price appreciation in the markets, or incredible events in the markets, like the fact that institutional money is showing up for cryptocurrencies and they've legitimized it. That's incredible, and it creates a very different market dynamic than the market dynamic we have. And I think it's actually underappreciated by most people.
Ethereum has launched quickly. They've created a product, and now it's almost like they're trying to clean up all the issues that they have that Cardano is addressing before they're launching. It's almost like the analogy that I give on my channel is that Cardano is coming in, making sure that the foundation is completely rock solid, all the plumbing's in place, all the electrical lines are in, all the clearances are in before they actually build the house. Where in contrast, Ethereum sort of built the house before trying to get all those foundations in place, and now they've got a bigger challenge with trying to clear that up. Is that a fair analogy? And if not, Why is Cardano going to be, in your opinion, so much more successful than Ethereum?
So one of the things about wisdom is that you tend to invent the safety belt after you invent the car. And you don't just proactively say, hey, it's a good idea to put a safety belt in. What happens is you get in a car accident, you go through the windshield, and you're like, boy, we should do something about that. So Ethereum and Bitcoin were much smaller systems in a much smaller economy when they came out. So there was no value at risk. We raised $18 million for Ethereum. We were like, wow, if we can get to $100 million cryptocurrency and get, a few thousand people building cool stuff, it's successful, huzzah. And now it's a $130 billion ecosystem. So there's a fundamental difference between where it began to where it's at. And similarly, when you build the car or the first airplane, you're not thinking at all about safety. You're not thinking at all about these success factors that come, the consequences of success that come. Well, if you build a car today, you don't have the ability to just pretend like history doesn't exist. So you have to do things differently. So the Teslas, for example, they had to adhere to all the safety standards that Ford and GM, these other things, while also innovating and bringing new things to market. So we recognized very early on that there were a lot of issues with consensus design, especially if you plan on scaling with proof of work in the way that Bitcoin and Ethereum were using it. So we needed a fundamentally different way of doing consensus, and even Vitalik agrees with that, which is why F2 exists, and they're trying to clean this stuff up. But we went beyond that and said the entire development paradigm of how people build dApps, they write smart contracts, this type of stuff, it has to be rethought from a very first principles basis, because it was never built in a way for sustainability. It was never built in a way for resource predictability, because if I'm an application builder, I'd like to have predictable application costs. Could you imagine a web host who's like, well, maybe I'll charge you $500 today for your app, and then tomorrow maybe it'll be $5,000, and then the next day it'll be $5 here. It's like, what kind of drugs are you on? This is not a business. I need to have predictable costs if I'm going to be able to have a predictable application, or else nothing works. The cryptocurrency's ability to communicate with things that aren't itself. So you need sidechain protocols, you need Oracle protocols, and so forth. And the frustration is it's not a technological problem as much as it is a business problem. Seldom do interoperability standards get selected by technical merit. There's a reason Wi-Fi is Wi-Fi and Bluetooth is Bluetooth and so forth, and it has very little to do with the fact that they happen to be the best available protocol on market. It's entirely possible that there are other protocols that just for whatever reason end up becoming the standard. Like the lingua franca of the internet's JavaScript. If we got a do-over, we would have done that a lot differently than JavaScript, because it was just such a bad language, but it just caught on and we just had to deal with it, right? So standards, they sometimes get set in mysterious ways. The duty of Cardano is to bring some scientific rigor to the conversation and some adult conversations about history. So go build your standards within Hyperledger, within the W3C, within the IETF, within the bodies that really make a lot of sense to do that, and do the science to know what fundamental capabilities. So we've systemized a lot of knowledge about cross-chain communication, about oracles, about sidechain protocols. Like we invented the NEPA-PALs, for example, okay? And as a consequence, we kind of know what you can and cannot do when you're moving value, information, and people between systems.